The top business stories live from the Sky News City studio. The drama of succession. We hear about concerns for the future of small family firms across the UK and Europe. I'll be speaking with the skincare creator Irene Forte as private equity investors take a stake in her company. And the head of the Djibouti Soverign Wealth Fund tells us about his plans for attracting more foreign investment. Good afternoon, this is Business Live with Ian King. Now, family businesses make up more than 60% of all companies in Europe, while in the UK, according to Oxford Economics, that rises to nearly 86% of all private sector businesses. But such businesses are at risk of falling behind their competitors, according to research published today by MasterCard. Well, joining me now is Mark Barnett. He is president of MasterCard Europe. Mark, welcome to you. This is all because, essentially, family-owned firms sometimes lack digital expertise, yes?
Yeah, so Ian, nice to see you again, by the way. We interviewed over 10,000 businesses in 15 European countries, and the three main things that came out is first, that only a third of them feel well prepared to operate in a digital economy. And that means two-thirds don't, which is potentially a problem. You mentioned the succession piece earlier on. There is definitely a family dynamic. 1 in 5 worry about who's going to take over, but I think the more pressing family dynamic is the younger generation are more willing to embrace digital tools, and that creates some tension in these small companies. And finally, 50% of those that we interviewed worry significantly about the cyber risk, cyber attacks, and so forth. So those were the three things we found in.
Homing in on the digital piece in particular, I mean, is there a broader issue with modernisation more generally?
Well, look, I think during the pandemic, we saw a huge acceleration in digital, and that applied to small businesses too. So most small businesses do have some form of business software. They come in two flavors. They're either very vertically specific, one for the dentist, one for the barber shop, one for the coffee shop, or their general business software tools, but their ability to go to the right tools and to navigate and use those tools to their full potential is probably the biggest issue. And here in the UK, for the last 18 months or so, we've been running a program called Strive, which is funded out of our philanthropic unit, the Centre for Inclusive Growth. We've invested 5 or 6 million in it here. And we're reaching over 1 million businesses with mentoring, with a diagnostic tool to help them get to the right digital tools. So I think there's a lot of progress happening, but obviously still a lot more to do if two-thirds are saying they don't really feel prepared to face or operate well in a digital economy.
Well, quite so. I mean, going back to the three things that you outlined at the beginning, I mean, I'm quite surprised that capital constraints doesn't really come up in that.
Yeah, look, I mean, a small business has got to worry about accounting. It's got to worry about its stock and its inventory. It's got to worry about its sales and marketing. And of course, it's got to worry about access to working capital, getting paid and being paid, and many other things, which is why they do need this business software. I mean, it is true that access to working capital is one of the key concerns of small businesses. There's a lot the banking sector's doing to address that. There's an awful lot the fintech sector's doing to address that in terms of underwriting these companies in slightly different ways to provide them with loans and working capital. So I think, again, a lot of progress in this space, but a lot more still to be done.
Mark, more broadly, what are you seeing in your business right now in terms of payments? What can you deduce about the health of the consumer across Europe?
I mean, we've seen a remarkable resilience in consumer behavior. Immediately after the pandemic, there was a big switch in behavior. So people during the pandemic were buying things, and then they moved to buying experiences. An experience could be just going out to dinner or the cinema, or it could be going on holiday or the grand world tour. But we're seeing very, very strong and resilient consumer. As I think you can see just by walking around London or traveling across Europe, people are out and about and having fun, enjoying themselves, and so that resilience remains.
Mark, while we have you, the payment systems regulator is currently investigating the cross-border interchange fees charged by the likes of you and Visa. Any update on when we might get some kind of, puff of white smoke from the regulator?
Look, that's one you're going to have to ask the regulator. I'm afraid. I'd love to know exactly when we're going to get, a puff of white smoke or a puff of any smoke.
All right, Mark, got to leave it there. Good to see you again this afternoon. Thank you.
Thank you, Ian.
Some other business news stories for you now. And the cybersecurity company Darktrace has been given a clean bill of health by the accounting firm EY following a review into its past financial statements. The company launched the investigation following criticism of its accounting practices by a short seller, the New York-based Quintessential Capital Management, which said it was deeply sceptical about the validity of Darktrace's financial statements. Well, EY said this morning it had found a number of areas where systems, processes or controls could be improved, but reported it had found nothing to impact the company's previous financial statements. Shares of Darktrace, I can tell you this afternoon, are ahead by some 24%. Food price inflation fell at its fastest rate since March during the 4 weeks to the 9th of July. The latest figures, compiled by the market research company Kantar, showed that prices during the period rose by 14.9%. That was down from 16.5% during the previous month. It's the fourth month in a row that the rate of food price inflation has fallen. Kantar said that the slowdown in inflation was driven by supermarket spending on promotions, which rose for the first time in 2 years. And staying with the grocery sector, shares of Ocado rose by almost 14% after the online grocery retailer reported a return to underlying profit during the first half of its financial year. Ocado reported sales of £1.4 billion for the 6 months to the 28th of May. That was up 9% on the same period a year earlier. That helped it to earnings before interest, tax, depreciation and amortisation of £16.6 million during the period, compared with a loss of £13.6 million a year earlier. Well, we began the programme talking about family businesses, and we can now bring you news concerning a successful enterprise that was born from another family business. Irene Forte developed her Mediterranean-inspired natural skincare line for spas in Rocco Forte Hotels, the five-star hotel business founded by her father. It's gone on to become a thriving business in its own right, stocked by retailers including Saks Fifth Avenue and Nordstrom. And today it's received investment from the US private equity firm El Caterton. And Irene Forte joins me now. Good to see you again. Give me an idea of the sort of stake that they're going to have in the company going forward.
So they've got a minority investment in the company, and whilst I can't disclose the amount we raised, well in excess of what we were planning to raise. And I'm really excited to have such solid investors to kind of focus on the next areas of growth.
So how are you going to be putting this investment to use?
So we really want to become one of the super brands. I really want to build a heritage brand. We're going to be scaling in Europe and the US and growing our team there. We're also going to be kind of really focusing on growing with our existing retail partners, because we've got amazing partners already. You've already mentioned some of them. And focus on growing D2C and really investing in a new product that we're about to launch, which has incredible clinical trial results.
Oh, tell me more.
So it's called the Phytomelatonin Rejuvenating Serum, and it's backed by 35 years of research, thanks to our scientific director, Dr. Francesca Ferri. And, we can't reveal much more yet, but we'll be launching that in January.
OK. I mean, your sales have doubled during the last year. Can you carry on growing at that sort of pace, do you think?
I think we might be able to grow even faster with this investment. I think there's so many areas of opportunity. We've really got the ingredients to create an incredible brand. And El Caterton are just the partner that we need to help us get there.
Did you talk to any other potential outside investors, or did they come to you with this proposal?
No, we spoke to a few, but El Caterton were the best partners for us.
Because they do already have interests in a number of other beauty and cosmetics businesses.
Yeah, they have an amazing track record in the beauty and personal care space. They've invested in brands like LMS, Merit, that's doing incredibly well, The Honest Company. So, yeah.
It's not all, I mean, sometimes one finds with entrepreneurs that when they take outside investment, they're not necessarily aligned with that investor and they end up having to run the business slightly differently. Can you be sure in this case that your interests are perfectly aligned with El Caterton?
I think so. Well, we've been talking for some time now. We've had a number of calls together, and I have a really good feeling about the partnership. So let's hope so.
And tell me how you're grappling with inflation right now. I mean, it's obviously a big issue for every consumer goods company. How are you managing costs?
I mean, we did have to increase our prices a little bit in January, and that's how we're grappling with it, to be honest. And
it's fair to say that your consumers are pretty agnostic on price, so given the way you see it.
It's a prestige brand, and they're pretty agnostic, I think.
Very good. In terms of then the distribution, you mentioned D2C just now, direct to consumer. I mean, this was something that was kind of forced on you during the pandemic, because previously you'd been mainly selling through spas. Looking back, was that a blessing in disguise?
I mean, for the business, yes, I think so. It really allowed me time, to focus on how to diversify the business, how to move from just being a spa brand in the hotels. And it gave me kind of the desire to get a seed round of funding, which I did during COVID, and develop it as a brand on its own.
And so in terms of your revenues now, how much of it is direct to consumer and how much is via third-party retailers?
So 30% is D2C, and most of the rest is third-party retailers, and then there's a small amount of spa business.
All right, OK. And presumably you're looking, I mean, you hinted at this just now, that there will be more retailers coming into the picture over the next 12 to 18 months.
Yeah, definitely some valuable additional brick and mortar doors and .com retailers, but we also really want to focus on our existing kind of retailers that we've got.
And for those who don't know you, who do you think you're competing with mainly? Who's the main competition?
Well, we want to compete with the super brands out there, but we're very much natural but clinically proven, so we straddle kind of the scientific brands and the more natural brands.
All right, Irene, it's lovely to see you again. Thanks for joining me today.
Thank you.
Now, Saudi Arabia and the Gulf states are seeking to diversify their economies away from oil and gas, for example, by investing in sport and tourism. But they're not the only economies in the region seeking to diversify. The East African state of Djibouti's economy depends heavily on a modern port complex adjacent to some of the world's busiest shipping lanes and which handles many goods that ultimately end up in neighbouring Ethiopia. Well, Djibouti now hopes to become a leader in other fields, including telecoms, finance and tourism. I've been speaking with Slim Feriani, the chief executive of the Djibouti Sovereign Fund, about the country's plans.
If you look at the global map of subsea cables, you will see that there are nine subsea cables landing in Djibouti, besides Djibouti, which is in the middle of between Europe and Asia. Now you've got Singapore in a league of its own with over 20 subsea cables. You've got Marseille in the Mediterranean with about 15 or so cables, and the middle of that you've got Djibouti with 9 subsea cables, and that is really a key asset that we need to monetize as a country to be a global hub for, or at least a continental hub for the digital economy, in particular data centers.
In the recent past, away from the economy, you've hosted both US and Chinese military bases. How do you maintain equidistance between the two?
I think this goes back to leadership and management. If you don't go forward, you go backwards. And I say this, whether it's for a country or an institution. I've invested about 100 countries. I've seen a lot of political systems. I've seen a lot of leaders. And I think Djibouti has that special leader, the president of Djibouti, Ismail Omar Guelleh, and he's managed to keep the stability in what is far from being a very stable region or continent for that sake. And so that's political stability and political will, but the genius also of working out to have French military base for historical reasons, the American, biggest American military base in Africa, and the Chinese, but also not just that. You have the Japanese military base, you have many other European military bases, and that's leadership who managed to get them all to be in there because of strategic location. But why are they all in Djibouti? Because it's the most stable country. They want to be in a stable country, and then that helps them also work on trade. At the end, it's about the economy.
Djibouti's port complex is renowned as being one of the best and most modern in the world, but it was built with Chinese money. Does that give China leverage over the country in the way that it has in other places such as Sri Lanka?
That's very interesting. I believe this is part of the great story for Djibouti and many other countries, closing the gap between perception and reality. The perception might be that the port infrastructure of Djibouti has been built by the Chinese, but the reality is not. It's not at all. The Djiboutian ports, world-class ports infrastructure, world-renowned, has not been built by the Chinese. Maybe a bit recently, but most of it has been built by Djibouti itself with international players who came in and built it from not very much over the last 2 decades. It's work in progress. I mean, today we have a handful of deep-sea ports world-class, so not just one, not two, a handful. And they've been built by Djibouti with international partners. Some of it, yes, with the know-how of the Chinese, but not the money of the Chinese for that sake. So international capital. And therefore, I think that's the answer to your question as far as maybe how much of an influence China has on the ports of Djibouti. Not that much.
Still to come here on Business Live, we'll have a look at how the markets have finished up this Tuesday afternoon. Stay with us.
And now it's coming from both sides and it's moving this way.
Only about half a mile from the Turkish coast, and it's evident that the boat seriously overcrowded. This is one of the most severe viruses in the world. I'm Alex Crawford and I'm Sky's special correspondent based in Istanbul.
The biggest party Tripoli has ever seen.
That's it. It got us then. There's a lot of action going on, a lot of hits coming in still. We aim to be the best and the most trusted place in news.
Clearly not had very much to eat at all. A lot of them extremely thin and very frail. Look at her arms. I can put my entire hand round.
This is the cocktail of drugs which the doctors at this hospital have been giving their coronavirus patients. Made for people who want clarity in an uncertain world.
Mother Nature can be vicious, absolutely savage. The world's largest falls now down to a trickle in places.
I can't imagine how much plastic is lying at the bottom of this huge lake. Whoa!
Close and personal with a rhino.
This is what makes the job so fantastic.
Slay Emirates, slay better.
On the bumpers.
Fly Emirates. Fly better.
Thank you.
Well, European stocks have finished to the upside this afternoon. All of the major continental European indices finishing in positive territory. Hopefully we can show you those any moment. No, we can't. Well, let me tell you, a big story in Europe today has actually been Novartis. The Swiss drug-making giant has climbed by nearly 4.75% in Zurich after raising its full-year earnings guidance. Here in London, you can see it on the screen there. The FTSE 100 up nearly 2/3% in a broad-based rally. Ocado is the leading blue-chip gainer on its trading update. But the really interesting feature has been the house builders, all of whom have enjoyed their best session in 5 months, amid hopes that interest rates might peak sooner rather than originally feared. I can tell you that Taylor Wimpey, Persimmon and Barratt Developments are all ahead by more than 4% piece. Outside the FTSE 100, Dark Trace, which I mentioned earlier on in the programme, is the leading gainer in the mid-250, up by 24%. Over on Wall Street, there's been a mixed opening to trading. The S&P 500 and Dow Jones have opened in positive territory. The Nasdaq is slightly lower. The main talking points are all the financial stocks. Bank of America, the second largest lender in the US, its shares ahead by more than 4% as its quarterly results came in ahead of expectations, while Morgan Stanley, its shares are up by some 6% for similar reasons, even though its second quarter profits actually fell, were 14% on a year ago. On the foreign exchange markets, the US dollar has rallied on the US retail figures that came out this afternoon, retail sales figures. It's more or less unchanged right now, though, against sterling. Sterling more or less at a 15-month high against the US dollar. As to the oil price, I think we've had a bit of a problem with the graphics. I can tell you the oil price is higher this afternoon. That is ahead of an update on US crude stocks, which are expected to fall. A barrel of Brent crude trading around about $78 a barrel the last time I checked. With me this afternoon is the Chief Investment Officer for Charles Stanley, Patrick Farrell. Patrick, good to see you again. The US retail sales figures, I mean, initially the dollar sold off and then it rallied, didn't it? What's been going on?
Well, the retail sales, I think the way to characterise it is it's still solid, but there are some cracks that are starting to come through. So on the back of that, we've seen retail sales up, and when we look at some of the revisions, they were only up 0.2, but previous month were revised up to about 0.5. So overall, the year-on-year number for retail sales is up 1.5%. Now, that means that we're actually buying less but spending more, because when you adjust those numbers for inflation, you actually end up in sort of a negative territory on real retail sales.
Quite so. I mean, does this inform the Fed's thinking in any way, or is it likely to?
I think so. I think what it will show, and when you take it into account with some of the consumer credit numbers, which were a lot weaker, but at the same time, we had consumer sentiment, which was a lot stronger. So the Fed's difficult task as we go forward is going to remain. But I do think that there are some signs that some of the discretionary spending items, like the sporting goods and the hobbies that we do spend money on, that's actually starting to ease up a little bit, Ian. And I think that that will be an encouraging sign for the Fed.
No, obviously, as I mentioned, financial stocks very much in focus in the US this afternoon. Bank of America, good numbers from them. Morgan Stanley were down, but perhaps not as badly as feared.
Well, I think they highlighted that there are going to be some green shoots in a number of different businesses that they sort of highlighted. And maybe that's the case. And I think anything with an upward trend in terms of an outlook for a company at the moment is very welcome news. So, and it's probably about time that some of the other sectors started to participate in the rally that the tech sector has enjoyed over the last 6 months.
Absolutely. Now, the showstopper here tomorrow, of course, is going to be the inflation numbers. What are you looking out for?
Well, I think one of the things that we do need to look out for is whether or not the UK can catch up on some of the energy disinflation that some of the rest of the world is basically participating in. And I do think that that'll be the case. And encouragingly, I think some of the food inflation can actually start to ease up a little bit. And I think about, the numbers that came out with the Cantor numbers this morning. Food and non-alcoholic beverages is running at 19.1% in the official CPI numbers. And if they come down to about 14.5 or 14.9, that's going to be a pretty good result. So hopefully we'll start to see some of that disinflation come through food prices and in energy prices. But unfortunately, the key sticky point is the services sector. And with the wages numbers that we had earlier on, I think there is still a lot of work that the Bank of England need to do.
All right, Patrick, we have to leave it there, I'm afraid. I know what you wanted to talk about Just Group, but we haven't had time, I'm afraid. Hopefully we'll tackle that another day. Good to see you today.
Thanks, Ian.
That's it from me. I'm back again tomorrow morning at 11:30 with our morning show. Do hope you can join me for that. In the meantime, do stay tuned. Coming up after this short break, it's Mark Austin. Thanks for joining me today. Cheerio.